Hey, YouTube's working again. Welcome back. We have had one heck of a week. Matthew's out today, so I have my good friend Howard Greenberg sitting in and kind of filling his shoes for a minute. And we're kind of into a interesting day today as far as volatility goes, but then we've got some other things kind of in a frying pan that we're going to go over. Plus, I've got some user comments to answer to, and I was requested to give my thoughts on RSI, and I'm going to give that too. So stay tuned, and thank you for joining us again. How's your week been going, man? It's been pretty nutty over there. I know you're busy, probably more busy than a one-legged man in an ass-kicking contest, I would say.
Yeah, it's been a busy week. These markets are moving left and right. We're growing the Quasar markets every day, adding new shows like this to our lineup. And yeah, it's been a great week, though. A lot of the things in Bitcoin and the way things that I tend to look at the most moving in the right direction.
Doing what we want them to do, and that price action makes our bills paid. So
Without a doubt.
Yeah, we've been kind of dealing with making some pretty good call outs for follow through into this week, and we'll probably do more following up this week than we will for call outs, but we do have a few other prices to call out. But going into the week before earnings, we got some mild data that came out this morning to make the market move and dance a little bit for us and gave us some good scalps. But as far as swing trades go, this is like the week where it's leave it to the day traders type of situation. And then next week, I think, is where we'll start getting some primo setups for swing trading. We did have Tesla earnings come out last night. That definitely gave us a nice gap up overnight. Implied volatility was a bit high, so I stayed out of the call debit spreads that I would normally grab in that sort of situation. I just couldn't find any that were worth buying. But I think later on, when give Tesla a few days here to consolidate, I think it's going to kind of stop at that half back target for a little while and consolidate. That's when those swings are going to be better, and I'll probably take something with enough time to be in position for the Q4 earnings, which I think is where we're really going to move Tesla, in my opinion. And it's kind of a repeat of what happened a couple years ago is what's setting up, where I can have some really stupid, far out of the money debit spreads for like 4 to 8 cents a piece on a $5 wide spread that just go berserk and sell for $2, So those are the home run swings I love to take. And sometimes it'll take a quarter long entry to get them. But when you get into the concept of the way I do it, I'll run a block or two of those spreads, and then if price trends towards me where I can achieve anything better than 100% return, my strategy is to then convert half of that position into butterflies by selling credit spreads against the debit spreads in a vertical. So it locks in the profit to where I cannot lose, and everything above 100% is captured profit in the position while I still remain both in a bullish position with the remaining debit spreads that I can still take profit on later. And I also have butterflies where if price is at or just under the middle or the body of the butterfly, I take profit on those too. So I've locked in profit. I can't lose, and then I can profit from both sides. I can close the butterflies within a day or so of expiration, or I can take advantage of the profit that the remaining debit spreads give me in a trend. So kind of an interesting way to trade spreads, but it works really well for me. I've had great success with it, and once you can enter a situation where you can't lose, dude, everything just gets easy. It's nuts. Plus, you get to use that credit that you generate from those credit spreads to put in a different position right away. The moment you hit the button and it fills, you're in. So you now have capital you can deploy elsewhere. You have a locked-in profit position, and it can't lose. I mean, what more could you ask for in an options trade?
Not much.
And that's just one of many strategies I use. And everybody always asks me about the wheel trade strategy. I'm going to build some new material because some of the older material I've made on the wheel trade strategy, it needs more details. And I'm going to both write up the concept a little better and produce a video. That's coming. It's just one of the many things on my to-do list. Plus, I've got to make a video short term on a couple other things too, so I'll get that going. I'm a busy man, and I know you are too. So let's get into our watch list and see where we're going with what we're looking at here. Oops, let me get the chat up so I can make sure I don't miss any chats for our viewers. And feel free, if you guys want us to look at any particular tickers or you just want to say hi, hit us up in the chat. We take requests. Moving on. I'll get into, I guess I want to get into replying to that comment first. And this was a good one. We kind of like this guy. He's been back and forth with us a few times. Let me get the comment up here. Come on, brain, utilize things. There we go. I can pull up Discord in my browser independently from my application, so I can actually do two things at once. It's neat. There we go. If it updates. It's not going to update. Go figure. Anyway, asking me on my take of on RSI and also a couple of tickers he threw in there. So let me get back to it. I just wanted to name the guys all. I wanted to look the comment up. I can't do that while I'm on YouTube. Anyway, he was asking me about taking a look at BLZE. So let me get my one position grid up here and get right on that because I take requests seriously. 2-hour BLZE. I have not even looked at this yet. We're going to put the dope on it live. So this looks like a pretty sweet reversion trade setup. We've got the old classic inverse head and shoulders going on down here. We've broken above the neckline. Let's start drawing. Love marking up our chart, man. I once coined the phrase, and I still do it, chart nasty. Took a note off of Vicky Barvalak. She says, trailer nasty, just chart nasty, you know.
That's right.
Humble beginnings, man. You got to have a sense of humor.
Absolutely.
The reversion trade target, pretty obvious here, about $9. Pretty easy to see. When you have a reversal and it confirms above the neckline, oftentimes it loves to test, or price loves to test it for support. And here we have two, so I'm going to raise a second level here, right in here. And effectively, we're likely to test $7 for support. 680 would be an overshoot if it consolidated in that range. And then this bar is pretty obvious. I mean, gaps love to fill. Everybody has the gap fill concept in hand. Pretty simple one. I like the setup on this one, and I appreciate the call out or the attention to get to me a chance to look at this ticker. I would have never looked at this if it weren't for you. Thanks, dude. So looking at the measured move concept, we have a nice primary impulse here. We have consolidation happening now, probably over the next few days. And let me get the 4-hour chart so we can see that a little better. I like to see the range. This is a bit of a choppy and wiki chart, so it's hard to read on a 4-hour chart or even a 2-hour chart for that matter. But we still get the same concept, and that's the whole point. I kind of take a Darvis box approach to a different level of analysis when I start drawing these. Someone said, "Is this that method?" I'm like, well, similar, but I guess I call it kind of the same but different. To quote Seth from Bike Hacks, that concept takes the accumulations range as a target, which is still valid. So, like, if you took this range from high to low, yeah, it gave you this pivot, perfect target. That's where the pullback happened. So that works. But I like to take swing trades a little longer, so I like to get the primary impulse or the meat and potatoes of the move instead of the peas on the plate, so to speak. I'm not flicking the peas off. I'll still eat them, but I like to get the meat and potatoes first like anybody else. We're all red-blooded Americans here. We love our meat and potatoes. Anyway, long story short, you have a primary, and then you have, if you set that up in the center of the accumulation or you find the mean of that accumulation, you get a really good idea for a high probability target, and then apply the half and whole rule, and it takes you back to the Darvis box concept where you're measuring the means of accumulations or the high to low. targets here, it's just above half a box. So the half and whole concept holds true there. And if I was to take a separate box and split this accumulation, it would have given me this target and so forth. For the long-term move, we're looking for the daily chart, and we're looking for the way back to this reversion target. And it looks like a 1.5 measured move. So 1.5 times that box probably lines right up with it, or just about pretty damn close to that reversion trade. So it just simplifies things. What this does for me is it gives me the opportunity to ignore all the noisy charts, all the very hard to trade charts, and simply focus on the higher grade or higher probability or much more easy to see trade concepts. So if I'm looking for the easy charts and ignoring all the hard charts, my probability of profit or probability of calling out price targets goes higher and higher and higher. If I ignore the hard ones and focus on the easy ones, obviously it's going to be easy, and I make it look easy just right here in front of you. So essentially, when you apply that concept, you're ignoring all the crap charts. You're focusing on the good ones. You find that you focus more on the primo setups, and more often than not, you're going to be correct. So that's how we can maintain that 94% accuracy rating that we still have from the get-go when we're starting to slam Kramer around. We follow through with this, we can maintain that kind of accuracy. So when we're looking for price targets, this is an easy concept, and you can take moving averages into account for it. In fact, let me get into that question and then double this down with RSI. RSI would say this might be a sell signal here, right? So I like secondary indicators if you use them and they work for you. That's totally cool. It's going to come down to the individual when it comes to price analysis. But I tend to use moving averages as a secondary indicator, or I'll use impulse moves and accumulation as a secondary indicator, and then the price action itself or the candles themselves are my primary indicator. So I don't have a need for a secondary indicator. I did for a long time, and I did use them for a long time. In fact, I used where was it? The fast stochastic, wherever it went. My chart's glitched up here. Fast stochastic kind of does the same thing as RSI, only it gives you two lines. It gives you two different average lines, and when they cross each other, that's where your signals are. It's a tiny bit faster than RSI, but it is still a lagging indicator. I like to be able to lead the market, so when I'm finding simplicity in price action itself, that's where I focus. So that's my opinion on RSI. It works. It'll give you a good concept of when to take entries and exits, okay? But I like simplicity better. So the less noise I have on my chart to look at, the easier my trades will be. So I tend to not use any secondary indicator, and RSI is included in that because this choppy line doesn't give me much of this, but my measured move concept and my accumulation break concept does. It's way more accurate. So that's my take on RSI. It's useful, but it's going to be in the eyes of the beholder. I love simple, and over the years I've learned how to use many different indicators, many different analysis styles, and I've found myself just whittling off pieces of it that I don't need anymore because all I really need is simple price action. Bam. Now my accuracy is way up there. Instead of trying to second guess the market or use an indicator to second guess myself, all I need is what happened before, what do I think is going to happen next, and set my price targets there. If it fails, get out, find something else. That's simple. You can't get any easier than that. So if you wanted to short this down, for instance, this is pretty easy too. Market structure loves to follow through on pretty much everything. So when you see these really big overhyped moves, same concept. Split the difference, move the box down, bam, bear target. It works both ways. It's that simple. So when I find myself finding price targets and going public with them, that's how easy it is. Really, just read the chart. The chart tells you everything. Yeah, you can have news events take things into shape, like earnings. They always throw things askew. You get like McDonald's had the E. coli scare going. Yeah, that tends to affect price pretty quickly. However,
yeah, it does.
When those events happen, Not like the chart predicts them, but you can still have the price targets of those events on your chart ready to go. And all you need is the news to break. Bam, you get your price targets in play. That's your exit. So you can play on news if you think ahead and already have those price targets laid out. And that's the other concept, is being able to think ahead by using previous data. In spite of the news, sure, the news will make it move to that target just a hell of a lot faster than general price action will. That's all. It just makes the old adage of the stairs up and elevator down come into play much more efficiently. And then in this case, we're taking the stairs up. And a news event, well, it could easily repeat this candle. What do we have here? Aha, earnings. How about that? Coming out on the 7th. We're set up. That's a good concept. It's in place. Price targets are there. We know where the support levels are. We know where the resistance levels are. If this breaks out and this reversal follows through, there it goes, right to those. All right, one more ticker he called out here, TMDX. This one is one that was on the Kramer list a long time ago. You can see my old dope back here from that. Traded that. The nice measured move out of it was freaking methodical. I didn't move the data box here, but there it is. Gave us that, and now we have a pivot right where we're at right now, more or less. Adjust. So we have a primary move, a secondary move down to the pivot. This is a potential gap down. If it can reverse here, cool, we can get the half back in place. But for now, I would probably speculate that this is more likely to be a bearish trade just by looking at the chart. And
it's got the 200-day MA just above it too, which, that's
kind of, it rejected it too. So we have 2 days, broke it in 1 day, tested it the next day and failed. That's today. If we break this 117 or 118 pivot, it should be, move it up, break that with some force after the accumulation here. There's your gap, and there's your target. We'll borrow that. Plain as day. Bam. Now we have a bear target of about 89.5. Just pay attention to this one. I'm going to look at the weekly chart. Likely to follow through with market structure here, in spite of, monthly says this was a debut in 19. So, I think we might even see this break support here and coming down a little lower to like $66 possibly. But market structure looks to be having its way with this thing, so this might give us a very volatile drop. I wouldn't necessarily go long here unless by some miracle you see a nice clean reversal here and you look for a reversion trade. So those pivots are certainly visible here for reversion trades. There's 2 of them. That is possible, but for now we're looking more bearish on this thing than anything. Wait for this to break. It will give you a sign. Give it a few days.
It'll either hit down, fill that gap to the downside.
Plus we have earnings on the 28th too, so could be a nice catalyst for a quick move. All right, let's tint this thing red then.
That might be, this could be an interesting one to play to the downside. I wonder what options look like on this, if they even have them.
Yeah, I think I want to take a look at that too. That might be good for some put debit spreads.
Yeah. Exactly what I was thinking there, my man.
I like to be frugal with my risk strategies. So whenever most people are saying, I'm just going to play put options, I'm going to run debit spreads. It's much lower risk. Yes, you cap your gains, but I'm okay with that because as long as I know what those are and what my risk is, both ends are defined, and I can have an exit target.
There is definitely some volatility involved there. Just looking at them, you're looking at premiums. Just the 120 calls 13.15.
Whoa, that is some serious.
There's some volatility in there. This is one that you might have to take a look a lot more closely at here. I'll let you know if I do something with this one because this does look interesting.
I wonder if it's feasible to do a long leap put and then calendar put for the spread on this.
Probably what I would. Sorry about that. That's probably what I would look at here. Would be a calendar, exactly.
Because that gives you an exit plan with insurance, plus a profit taker, and then you can flip it later. I like that idea.
Well, you can turn the calendar into a covered or into a butterfly, whichever you want, or a broken wing would probably be what you'd look at on a trade like this. If it starts the first half of that gap down immediately, you think the second half's coming. You definitely got a few different ways to play that. So,
yeah, it starts out with a calendar spread, and then the cool thing about options, and it takes a while before a trader can come into the concept of they're more for being able to adapt positions than they are for just scalping and trading long term. So you can adapt to potential volatility by setting up a strategy to hedge with options. And there's a few strategies for that, particularly the collar strategy tends to play into that for most of the institutional traders who are into long positions where it takes them too much time to get in and out of them without affecting price and causing serious price action volatility. Within that concept, on the other side of that, you can trade the other side of that and still be a winner, even on the wrong side of the trade. So if you have essentially the idea of it's like a poor man's covered call, but in reverse. You're running it with puts instead of calls. It does the same thing, and then it gives you a hedged position built in that you can capitalize on later. So pretty cool stuff. It takes a little time to break even on your long position with that, but if you're patient and you have a bit of fortitude and you take your heart medication, you can ride it. Works out very well. Moving on, we got a few more things to talk about, and then I want to kind of revisit some things, and then we got to get into some crypto stuff, man, because I think there's some things playing in crypto that we're going to like to see. Let me get this out here. You know what? First, we'll revisit from your last call-outs here. IWM, and I took some trades in this thing. We were talking about, let's see, where were we last week? Or the week before. We're talking about this halfback here that completed. We talked about the Bulls trade, and it nailed that target. I want to say you called out 227.
Yeah.
And it extended just a bit beyond that. Nice call.
Yeah, I missed a few pennies there.
Worked out beautifully. Gave half back. Now we're consolidating. And my flip on this was I went and day traded and swing traded some contracts on IWM, and then I still am not in a position currently on TNA. I'm waiting for this to either break south for a measured move down and hop down off a pivot. TNA follows this pretty well. And then sell some puts. Or I may end up just buying long equity or selling an in-the-money put to acquire a position for a discount is probably my more likely scenario. And then possibly running back into another wheel, but with a higher cost basis. Technically, since my share appreciation on the break even for the covered call I was assigned on and called away with on this on TNA versus my running cost basis, I'm technically owning TNA for negative $1.36 per share currently.
Can't beat that.
Can't beat that with a bat. I mean, I've achieved my goal of owning it for free within a fiscal year. I've done that well before a fiscal year. That's in March. As for if I add a position now, I have to take that concept of that price cost basis added to whatever I tend to acquire at, and then divide that by half, and that'll give me my current cost basis. So it will end up being back into I still owe money on this one. So I'm going to be very, very timid on taking a position until I see what comes out of next week's earnings, and then I'll be able to have a more clear picture of what I should get into. So I like having a position that pays me to be in, but I also want to keep that. I don't want to give it back. I'm always saying, go eat your lunch before the market eats it for you. Same concept, just a longer time frame.
Yep.
And then
makes sense.
MSTR, man. We both agreed on that, and we haven't hit my self-proclaimed analyst target yet of 242.88, which I have here on a number to the penny. But we're getting pretty antsy in this thing. Let me break my chart loose here. We've had our 1-for-1, and that was beautiful. We've pretty much conceived where we would imagine the consolidation would be in range. Let me get the 2-hour chart out. We were looking for this high-low. I want to say that I should slide another box in here and split this range here to figure out where our next move is going to be. Let me go ahead and do that while we speak here. But we're looking for an outside target on this thing too. So let me grab this, split our range. We've hit that. So if we take this high to low, this is our impulse move. Right there, we nailed it. So short term, we've gotten a nice 1-for-1 out of this. Can we go higher? Well, a half a move higher is right at my target. So keep an eye on this bad boy. It is still bullish, but it is a bit on the parabolic side now. So, definitely be nimble on this thing if you're a day trader. But if you're a swing trader, that target's still valid. It's still in play. It's just that if you can take profit, if you got in on our call out and you are in profit now, maybe take some risk off and hang on to that lunch before the market takes a bite of it, because we do have earnings on the 30th.
That'd be a move up from 199 is what we were saying if it broke that 199.
And it did everything we wanted it to do and more.
Absolutely.
Earnings on the 30th, that's your risk. So anything between now and then is going to be volatile. We can expect that. So yes, it can still hit my target. Yes, it can still give half back. So be nimble until it's time to be smooth. And smooth is swing trading. Nimble is...
Well, risk and reward. Your risk and reward is now not moving in your favor anymore.
Right.
Your move up that we're looking at maybe another $10 or $15, and your move down is looking more at double that. So that's where you start to get into your own, whatever your time frame is and what your risk and reward preference is. But for me, where I'd start to look at, or what I start to say is, hey, what's more likely to happen, and what are those moves going to look like? And if it's not going to go in my favor, how badly does it move? So have a trailing stop or have a stop in there based upon that, so that you limit that risk reward, because right now there's some downside risk. And the total upside, I'd say, is 250. In other words, if it goes parabolic, Bitcoin gets a bid, everything hits, that's the highest you're looking at.
Agreed. That's what I'm thinking too. And between this and Mara, I mean, we're kind of right on concept with that. And that takes us to Mara. Beautiful plays on this thing again. We're back in the liquidity zone now. We've given half back of this move. Last week we were talking about hitting that upper range target. It gave us a little more than that. This is the reversion, if you remember right. This is about where the middle of this part of the trend would be, from here to here, not including this. We nailed that. Well, this is the upper range of our current move, but this has been nailed already a 3 times, and we're likely to accumulate in this range on market structure. This is where we would expect a trend to begin if this is going to follow through with market structure, and then head for the next reversion target, which is this bad boy right about here. So can we hit $40 with the Mara? Yes, it is possible. Do not hold your breath. Do not sit there and FOMO this thing, but we're looking very carefully here for the long term to present itself. And this is the key area where we should be looking, because if market structure follows through, this is where the trend begins. We know all the pivots. We know everything to the left of where our price target is going to be. And guess what we have here? A primary impulse and consolidation. Measured move takes us exactly to $20 and some change. So let's go ahead and stripe that out on course here. About $20, maybe $21. So short term, we're looking for these targets to take place, but only if our trend continues here and we do have some looming stuff happening. I don't see the earnings call printed out yet for announced time, but it should be in this next week here, I think. maybe.
Their earnings are November 6th.
Okay. So we're looking probably right in the end of consolidation here under this 1870 pivot here. We should see some follow through, or maybe a half back between now and then too is possible. So half back would take us down to like $17. Maybe get us to the red zone here in 1650 range, but going to be volatile in between. And
Yeah, and you just nailed the level I was looking at. That 1640, 1650 range would be where I would make a move to the north side here. That's where my risk reward, I think, 1460 level gives me a great level of price support in the past. So, now my risk reward starts to get in my favor. So that's what I'd be looking at there.
exactly. And that's right in the red box I have here, which was a liquidity zone that we were very adamant about being a critical zone. So in past trades, we've done very well in spite of this volatility and chop, and we're expecting things to get more volatile just before earnings and eventually produce either a trend back to returning to highs or just more consolidation in this range and flatness. Well, flatness still has range. We'll still trade it. We're just going to probably
between 1450 and 1950 is a nice little range trader for the since that started back in beginning of August.
That's been beautiful range. I mean, this thing is just glorious.
It's really even done that since January. It's made a couple of pumps up above it, but if you look, that's where it's done most of its trading. $20 and below.
And in swing trading circles, we call that the trader's action zone, or the TAZ. And it's just given us very clean concepts of that. So, yeah, I think we're going to see some volatility in the short term, and eventually we will see a nice swinging trend out of this. Either we're going to break these ranges and head higher, or we're just going to continue to consolidate in this range. So, still a trader stock. That is probably why the premium's so good on the option selling side of things. And I think the last time I did the math on this particular one, it was right around 9 or 10% monthly on natural expiration monthly yields. It's like if you sold covered calls, a couple strikes out, and cash covered puts at the same time, a couple strikes out, it would yield about close to 10%, which is pretty damn good. Doesn't quite come close to my TNA yield, which is about 18% a month. But hey, anything above 5% is fair game. And
absolutely.
When you compound 5% monthly, you do well. You beat market performance at that rate. 10%, double market performance at that rate, which is good. So dollar for dollar that you are trading in that concept, you're doing better than the market. Hey, you can't beat that.
Yeah.
Who says you can't beat the market? So for all those people who just deposit money into SPY and QQQ, you're going to do better than they are. That's the whole point.
Exactly.
Okay, let's see here. We got a couple others to get back into, and then we're going to go and get the new list out, which is mainly just stuff we've always watched, but mostly large caps and mid caps, but we'll get in there. I want to reflect on a couple of Matthews picks that have just been out of the park. I mean, OKLO, psychotic, man. That thing was awesome. Now we're pulling back finally after this nice parabolic trend here. I think we might even see this thing hit the middle of about 1650. So if you're short, you're doing great right now. 1650 target's pretty obvious. And later on, if things reverse there, we could still be bullish. AI is still going to require a ton of energy. Nuclear is the way to go, we think. And natural gas will have some effect on it too. But nuclear seems to be the theme, man. Speaking of themes, I mean, Matthew loves themes, and he's been dead on with this thing and then some. It even blew away my previous self-proclaimed analyst target at 1280. I mean, just smoked it and went a full 2 lengths higher. So, I will pat myself on the back for hitting that target, but man, I left some money on the table.
Hey, you left some meat on that bone.
I did indeed, but it'll come back. We'll get some pullbacks.
Again, that's not, that should be the least of your worries.
A wise person I know says to set your price targets at where you'll be happy. I am happy. I made a return. It was sizable.
1548 level here would be real nice.
I would love that. Anywhere from 1650 to 1450 is feasible for a current return,
Yeah.
return to earth sort of move. And then I think once we start breaking range here, we should see another trend out of this thing or two. And eventually, all themes do come to an end. This thing has never really had market structure effect on it. I mean, since its inception, it's fairly new. So this can trend a hell of a lot higher from here once it's consolidated a little bit.
Yeah, it went basically sideways for a couple of years.
Yeah, went nowhere. And
It
then,
was it was a money market fund.
oh yeah, that's probably it. And then we went into another one he called out was Southern, and this thing is starting to take off now. Accumulation's done. We're heading up for that weekly 2-for-1 measured move. Well, probably 1.5 first. 101 or 102 is the target, I believe. Let me break the chart loose again. For a half measured move on this thing. If it goes full beast, my self-proclaimed analyst target up here in purple, 113 and some change, 113.30, 113.28 to the penny if you want to call it that, puts us right on the full block 2-for-1 measured move. Short term, we were looking for this little zone here to get broken, and that's why I was in blue here, just above this one measure up, and it smoked it. Now we're accumulating on it. I think trend is good. We can get rid of that now. This will be a more long-term trade as far as like, this isn't the scalper's chart really, but a swing trader's dream. This just follows through beautifully. Be mindful, we do have earnings on the 31st, and we might get some more volatility in this range before we finish that target. But if things are extremely bullish on the earnings call, sorry, my cat's in heat. We will see these things get nailed quickly, and it doesn't typically make big moves on earnings, but I think if they tie in a little bit of, hey, AI is demanding us to produce more energy,
Absolutely.
that's a boon, baby. So keep an eye on this one. This one's still bullish as hell.
Yeah.
Another one, just real quick, VST. We're kind of looking at range in there, and we were right about that. We were like, yeah, it's likely to range between these two, and here it is. Broke the middle. We're looking for a short-term short down here, maybe to about 116, 115 or so currently, and then maybe it'll swing into range again and give us another bull move. We'll see. But so far, this roundy has broken support. It's looking to give us the bear target pretty quick here. Probably earnings coming out. Yeah, there it is on the 7th. So look for that to continue to be a decent little short. If it bounces off this sucker, cool. We got a good chance of trending out and putting this down as a primary move. So keep an eye on this one as another one of Matthew's picks. So far, it's trading.
Yeah, it looks like most of these energy nuclear plays have had pretty good earnings reports. So if you do get that pull back to 114 to that range you just pointed out, might be a nice spot also. So you guys got some nice setups here.
It's collecting, and this theme is doing well. And the price action on it, the more volatile it gets, the better we can get at picking out targets. So let this accumulate. It's got a couple more days of short, and then we'll see what happens when we hit the meter here and pop off that sucker. If it breaks out of that, I'll go ahead and do the dope now. Let's just put this down. That's one big ass move to the mean here. And holy smokes, this thing can move. If it gives us this is what we look at for targets here. That box concept that I keep throwing around, man. This thing keeps paying my bills. I'll keep using it.
Yep.
So half a move, we always mark that out. Let's see here, about 154 and some change. The whole move, I'm not going to put this in purple just yet because I'm not so sure it's going to hit a whole measured move because that was pretty parabolic to begin with. But 180.40, hello, that'd be a nice payday for people who got in down here. Keep an eye on this thing. It's going to give you some good opportunities, guys. And I think within the earnings call here, we're going to see some trend out of this thing. It does have a little downside risk. I mean, maybe we hit 101, 102, possibly if the current short-term earnings says, hey, this is not paying out just yet. Give us some time, whatever. We know where those are. So there is some downside risk, but if things go well and it holds this level, I think we're in good spirits to keep long on this thing. So definitely keep an eye on that one. Last but not least on Matthew's callouts, we got ASML here. Still waiting for this thing to accumulate, but so far it's still kind of maintaining that look for it might just test 570 or 580 down here. It's threatening to break this low and give us that play. So
Yeah, ASML is like Boeing, man. I'm not ready to pull that
yeah,
trigger yet.
no,
I'm a fan of it. I realize it's the second largest corporation in Europe, so too big to fail, so to speak. We
yeah,
know all of the macro around the fact that Europe wants to have its own chip manufacturers. That's their version. That
hmm
is their chip manufacturer that's, in the EU. But I don't know yet, man. I'm not there. I
I
just think
mean,
the EU's got a lot more issues right now.
the more legislation they put in place, the harder it is to really run a business over there. So yeah,
Yeah, I mean, and just their GDP is anemic. Almost it's at get the defibrillator out and we got to restart this baby.
right,
Versus the U.S. economy, which really, again, the IMF just came out and said that. So the IMF just did a report that they just basically said that it looked for the U.S. equities to lead the G7 tremendously. ASML, while it is a U.S. stock that we're talking about, it isn't. It is a
right.
dispository, which means it basically trades upon the European counterpart. So it's
That's
just something to keep in mind there for more of a macro. As you know, in my role at ABCA, I look more at these macro items.
Yeah, and it's I mean, the chart basically confirms that. I mean, we're
Yeah.
looking pretty bearish here in the short term. So let this thing grind out. If by some miracle we get an H pattern out of this thing, which I don't think is probable here, if we test 681 or so and hold it and then break into a reversion trade, cool. We got targets for that. But
Yeah, you give me a double bottom down there, I'd love it.
yeah,
That's what I'd be looking at.
the old undercut and rallies concept,
Yeah.
whatever you want to call it, but it's right in there. If it smokes that level, look out. This thing's going to be one hell of a bear play. That looks more like a bear flag than a reversal to me. So
Absolutely.
stand fast, be patient with this one. Don't just jump in and chase it. But we did have a good short out of it, and we'll wait and see what it does later. Um, I want to go into a couple of other things, and then we'll make time to get into the Bitcoin thing because you got a lot of
There you
cool
go.
stuff to
See, the
talk
tick
about.
just went down 1,000 here
Woo.
yeah, it ticks down 1,000.
I'm gonna have to start playing those nano contracts again. Those are fun. I've I have
You're
a
a degen, buddy.
I have a strategy where I produce short-term income trading futures. For now, I'm a little gun shy on taking massive size or scaling my size in those accounts. So I just take distribution on them. I'll start them with like 250, $300, and 6, 8 weeks later, I'll run them to like 10 grand and just pay my bills with them and then rinse and repeat. One of these
Nothing wrong with
days,
that.
I will take and just keep one account growing from 250 on up, and let's see if I could turn that into $1 million eventually. But for now, I kind of need to pay my bills, so I got to take distribution from those. Most of my growth comes from my bulk account where I'm wheel trading and running option spreads and stuff like that. That's the get rich slow concept working its magic
Absolutely.
and doing its thing. It's steady. I keep that going. The short term stuff pays my bills. But eventually, I want to challenge myself. I want to see if I can turn, $250 in a futures account into $1 million. Boy, that'd be something. But
Yeah, absolutely.
in time, I gotta be
Sounds
able
like
to.
a new show we got to put together for Quasar Markets.
Right. That could be
Do
something to
that.
do. Turning small money into big money and just using your wits and price action analysis skills to do it, man. It's doable. I'm not going to say it's
Yeah.
impossible. I'm saying it's highly
Yeah.
probable
As
that
you
I can
know,
do
you're
that.
going to be doing that normally different parts of the day. So,
Right.
you're doing that at, maybe before the market opens usually, or that 9 to 10 hour. So it does
Yep.
make for a good show too. Something just to keep in mind.
Absolutely. And I mean, with as busy as we are doing content creation like this, I mean, it's kind of right up our alley. It gives us time to trade for ourselves
Yep.
outside of all the stuff that we do. And that's the other concept that I have is I use that on my time, and sometimes I'll take some trades while I'm live streaming to our members at Bullish Bears. Sometimes I won't. It just depends on where I'm at with how much I can focus on my entries and exits. Cool, but I can kind of do both. I have flexibility with futures that I wouldn't ordinarily have with equities, and that's the basic concept of short-term income. Hell yes, it works great. It pays my bills. So eventually, I will produce a growth account, and I'll take some very nervous steps to take some huge size, running like 10 or 100 NQ contracts at a time and to see what happens. Boy, that makes my goosebumps rise just thinking about that kind of numbers. But hey, if I started with like nothing and I put it up to that level, even if I blow it up, I've lost $250. Whoop-de-doo.
Yep, that's the right. Just don't crash and burn.
Exactly. Just keep it alive. Keep it alive. Moving into, I want to talk about SQ here, and then I'm going to go into SoFi in a moment. But SQ playing right along in our liquidity zone. It's threatening to finish this accumulation. It's got like 2 more ways to go before a wedge is formed here. I think maybe by about the first week in November, we could have a good idea where this is going to go. Just pay attention to this range. Looking at market structure, it's doing everything methodically. My current self-proclaimed analyst target on it is $89. If we crunch out of that, and that is a 2.5 for 1 move, by the way. Reversion targets, hello, $140. Yes, please. Double my inception of $70. I'll take it. But short term, let's be real here. Let's trade the range here and wait and see what this is going to do before you go and get into investment mode on this thing. But it's looking more and more like investment grade now that market structure's had its way with it. It's done its cycle. We're waiting to see if this trends out or not. It'll give us the go or no go button pretty soon here. But for now, the trade's been great on it. The swings have been very nice measured move trades, and this is the last run here. Short-term half move here, and you can see there's a previous bar that stops exactly on that pivot, right at 76.47 to name the penny, and it's about a half a block. So, yeah, it's got that potential to finish a half move here in the short term, and as long as it holds this range, we got a pretty good idea of being bullish on this thing. Does have some downside risk, of course, down to like $67 or so, maybe even 65 at the low. If you get an undercut and rally on the 200 here, that's kind of where it would be, Yeah. So short term, we could have some more volatility, but I think we're going to start setting up for some trends out of this once market structure is complete to the number, and then we start to break out of that $89 target. So give it time. But this is a great thing to trade. I love SQ. Very, very fruitful. And then what was the other one? Dang it, SoFi. SoFi we killed. We called this out, and we were talking about this thing weeks ago, and this was the range to break, and it gave us the goods. It gave us a primo, absolute smoking, almost a 4 for 1 or 3 for 1 measured move here.
Yeah.
And we peaked at 1130 today and immediately rejected. There's a pivot there I must have missed. Let's look left. Aha, there is a price bar right in here. That gap between those 2 bars. Let's draw a pivot there and see if we can break it. Back to the 2-hour chart. So we need to get outside of that. Lo and behold, that's our measure move block. Can we say take profit, take risk off, and wait? Yes, we can, because this thing has been parabolic. We've nailed these bull trades again and again. This is kind of a bonus move, I like to call it in here. And yes, it can hit that 1140 pivot, but let's take some reality check here and take some profit off.
You have earnings there, just so you know, the 29th.
Yeah, and that's the other thing is 29th, we have earnings coming up.
They would worry me a little bit so far. Some of the banks that have had misses are the banks that have more, retail consumer credit card, and that's what SoFi is a specialist in.
Yes, and it's not like super high interest revolving debt, but it's a lot of consumer debt, which tends to be revolving, unfortunately, and yeah, they're exposed. If we print this long-legged doji up here as a daily candle, keep an eye out for that. Expect an immediate pullback afterwards because We've seen it before. There's one there, immediate pullback. There's one here, immediate pullback. History repeats itself typically, so keep an eye on this.
You know what is interesting here too? Go all the way back to their earnings on July 23rd when they made this last explosive move, that that you were sort of looking at there on a bigger chart. No, further back, 23.
Oh, yeah, weekly.
And you'll see that they had great earnings, and that's what started their downfall, though, right there.
Right.
On a daily pattern. So if you look at July 28th and 2023.
Yeah, it kind of gave us an overshoot and rejection.
And then it just went, that's what started, like, literally, it's crash.
Yeah, it gave us market structure at that point. I mean, we've got
yes, like you said, history repeats itself. If I'm looking at this chart, I'm saying, man, it looks like it could repeat that earnings here.
Yeah, it's very probable. I mean, we could see it run back down to like 1040 pretty quick.
Well, if you look too, its last 5 earnings have been 4 of them positive, and it's moved down on the news each time.
Right.
So, expectations, I think, are one of these. This seems to be one of those companies that expectations are always that they're going to give you just absolutely, blow something away, and then when it just has a general 3-4% beat, it goes down.
It's a purveyor of FOMO fueled psychosis.
Let's sell the news. Yeah, it's a sell the news company.
Absolutely.
That's what I have here. SoFi is one of those that tends to be a sell the news company. So that's.
I agree. And then market structure again. This is that third leg of it up into the resistance areas. This is where, I'm not the only guy who respects market structure. This is where we'd like to see it trend out and start giving reversions, but this is where FOMO can kind of take a turn in this thing and pull it back. Yeah. So if it does break out of this level, sure, it's got those reversion targets. Those are all plain as day. But don't let FOMO take control of your trades. Let the price action tell you what to do.
And I'd actually say if it doesn't break it, watch out. It's starting to look a little bit more like SQ did, right? Where you had 3, 4, 5 different attempts at that same resistance level, and you tend to get where that just becomes such a strong selling period.
Absolutely. So let's turn this liquidity zone red. There's the break it, no break it mode right there. And that daily candle closing with that long upper wick, if it does, look out. This thing's going to get ripped right back down to one of these pullback targets. And it could be anywhere from this block, half a block, whole block, or even down to the red zone here. So be careful, be nimble. Yeah. If you've got profit on now, I would definitely take some risk off if I was going to stay long in this thing. Because this is pretty parabolic, and there's a lot of FOMO that fueled that. So, return to fair market value or about the middle of the range. Yeah, it's right there. Pretty obvious. So definitely be nimble if you're into SoFi. But we killed that bull trend. That was awesome. We did great. Couple other mentions real quick. I got a couple minutes here. Light bridge here. We can see that did its thing. And then Cleveland Cliffs, I don't care to trade this thing enough, but I might start because I can see there's the conceptual, inverse head and shoulders pattern here, but it has hit the neckline, rejected. It's pretty obvious. It came down, tested support on the neck. Maybe it gives us a play back to the upside, but I think we're more likely to hit some range here. I'm pretty sure Kramer's probably jumping up and down saying buy on this thing by now, but I would beg to differ. Probably around 1280 would be my anticipation of key support here. So let me throw a pivot on there. You can see there's a primary move there. If it breaks that, we get a nice secondary move, takes us down to the next accumulation here. We might get a short to 1180. But if it holds here, we can go back into the range and start trading it again. So it's starting to interest me a bit, but it's not quite there yet. I'll wait and see on this one before I just go and dive head first after an inverse head and shoulders like that. Never chase them. Just wait till they break. Be patient. They'll give you an opportunity eventually. Let's get into crypto, man. You wanting to look at Bitcoin, right?
Yeah. See what's going on there.
Oh, man. I had so much old dope on this thing. I had to clear it up. This channel we traded with QM. I was like calling out that pullback to 57 and kind of nailed that, but or 58. We're looking at currently we're accumulating. We wicked a measured move here. Let's go to the short term. We'll go to 2 hour. It's a rounding top. Nice. Love these. Everybody tries to short these things and then they get caught. Yeah. I think we may have another leg setting up here. Let's go ahead and grab our.
I mean, I'm looking at it, fib levels a little bit from that move up. What did I start it at? I started my fib level last Thursday on the 10th. Moved it up. It made a nice measured move back, 382 pullback, and now it bounced nicely and continuing its bounce. I think if you see a move here above, I think you see us challenge 69.
I agree. It might even shoot to like 69 and a half here, looking at the current block. A little downside risk. We might go and range this accumulation back to like 67.2 or so. Just kind of ranging this bar into it as if it would be a wedge here. So we may see a wedge here. And then worst case scenario, if the wedge fails, we might get a pullback here to like 66.5, 66.6, somewhere around there. Possible. Let's break into a 15-minute chart.
That's my key point. To keep this valid, it's got to stay above 66.5. Actually, it's about 66.450. Get a little bit more.
Agreed. And it's right in our range. Yeah, 450 is the mean of this consolidation right here. That's pretty obvious. Let me draw a liquidity area real quick here. That's where I'm looking. Those wicks right there tell the story. Let's go ahead and draw that out. Kind of the make it or break it zone right there. And if we do pull back and this ends up breaking down, that's where our target is going to be. Of course, short term, we're going to see some accumulation around 66.8 or 69 or 67. But if we accumulate and break bullish, 69 is the challenge. And that's pretty easy to chart on this one.
Yeah.
I like to go into a concept here, and I've been teaching this, and I'm going to eventually build a full video on it. It's kind of a way to cheat when it comes to bull flags and bear flags and pretty much any flag. There's a couple details I'll leave out because it's kind of a concept I'm still building, but it works. You draw a wedge, stick a regression line in it, and I'll tell you a little secret. If you find about where that mid should be, take the second impulse within that channel, treat it as a channel. Either way, it's a wedge, channel, broadening pattern, doesn't matter. It's all the same. Grab yourself that second wave as a way to kind of give you an indication of whether or not this is going to fail a bull flag or not. Set it down at your angular support, and if it breaks, it'll usually give you a very fast measured move scalp. And in this case, it did. So I call this the dang it, the breakout, the fake detector, or
there you go.
There's another word for it. But it gives you a very fast measured move, and it gives you really quick concept of price targets for taking advantage of that failed bull flag rather than getting, stopped out down here for a loss and only to watch it rip right back up to angular support, which was previously, or angular resistance, which was previously angular support. And that's exactly what's happening here. And you end up with being able to be keen on exactly the moment where that flag's expected to fail. And if you're just patient and wait for the break, you can get short on the failure. You can take it to the target of that breakout detector or that fake detector.
Yeah.
And you can pull it into a measured move if it breaks below. It's an easy trade. And this is very effective at finding these things. The other part I'll leave out is how to trade the follow through later, and that's a detail I'm still working with, but I'm also keeping that kind of proprietary to our members because there's a little trick to it. but it works so well. And you apply that to your price action analysis on any flag or any channel, it'll really help you stay out of trouble. So I want to give that away because I'm here to help. But there's some secrets I've got held back in this that'll come out later.
Absolutely.
But good stuff. So the other thing we're linking to, you were into Mara. We got through that. Was there any others that are attached to Bitcoin that we want to be watching right now?
I was watching BITF. BITF is a smaller company.
Hey, nice move. That was a nice measured move. This is day trade material right here, baby.
Yeah, and that's what you've seen here. This is pretty good for a day trading. It's respected its top trend line pretty well here. As you can see, it's holding on, nicely. I think that any move here, I like trying to play bounce off the $1.70 level. What I'm looking at here again, I think that if we get a little weakness here going into earnings, I'm going to look at this for a move off of 175 to the upside.
I like it because we have the 1 for 1 or 1.5 for 1 done, pulling back to consolidation. A break below 190 would give us that shoot pretty quick.
Yep.
Let me get the pivot on place here before I go. There it is. Close enough. So you kind of split the mean of this consolidation, but I like to find the bar that's closest to it on the break, and that's our pivot. So 190 and like 0.7 of a cent or 0.07 of a cent, whatever.
Exactly what I was saying. You got it.
We'll call it that. So yeah, if we play off of that, we get a really nice reversion back to like 206, 207. Easy trade. And then the first part of profit taking will occur on this guy here between about 202 to 205. That's very typical when you see those wicks. If you wanted to, you can just draw that as a quick liquidity zone for short term. And that gives you target to target trades. Very easy, just like that.
Yeah, that's exactly what you're looking for. And if you break that liquidity zone, it's pretty easy to see 220 is going to be where you're looking for next.
And this is pretty cool. I kind of like this. So when we're looking at penny stocks that relate to basic Bitcoin price charts, they follow through very well. And this gives you very, very low risk exposure.
It trades almost 18 million shares a day.
So it's got plenty of volume. It moves very nice.
It's got options. It's fun to play with. It's one to keep, keep in your toolbox there.
Does it?
Because again, and especially for someone that likes wheel trades and things like that, when your cost is only 196 to start off with, you can start to get some interesting plays.
Does it have weekly options by chance?
No, let me check. I'm going to check right now on that for you.
Because dang, I might just
It does. It has weeklies on Robinhood of all places.
Dude, I might just wheel this bad boy.
That's what I'm saying. That's sort of why I wanted to tickle your fancy there. You are my man when it comes to wheel trades. I've been looking for a setup where I thought, risk reward and what you're looking at there. I mean,
what are we looking at at the money? Let me,
selling some calls on this thing. $2 call, 13 cents. Not much movement today. It's more of a day trade or a zero DT when it comes to the options that start to move it. But you can do some fun stuff with it.
Let's see. We got a nickel on tomorrow expiration. We got 15 cents at the money. Ah, dude. Yeah. This is one of those stocks I've been looking for. So when you get these and they're trading around $1 or $2, these you can own them for free inside of 6 weeks. I'm not kidding.
Yeah, that's what I was thinking here. Is this would be one, and I'm going to say to my even further, if I want to own a stock that has upside potential, a Bitcoin mining company, is if I can own it for free and just say, hey, I'm not even going to look at this anymore. I got it all for free in the last 6 weeks. Just going to hide this away for a year or two. Where could it be?
One of my dolls that I've done that with, and it was actually a junior mining metals company. The ticker is LODE. I sold and sold and sold options on that thing to the point where I own it for negative 26.80 a share. And the options chain is dead now. It doesn't really move. But if that goes bankrupt tomorrow, my money's in the bank.
Yeah, I don't care. I had a play like that on Ford when Ford was still trading. After COVID, it was $3-4 it was trading at, and same type of thing. And I own a bunch of shares now that I got for free. I got them fairly quickly and said, you know what? Just putting this away, and almost like with my Bitcoin, it's going into my hardware wallet where I don't ever connect it to the internet,
right?
So I can't trade it. I'm going to put this. It's in an account that I barely use, and I don't look at it. And I'm just saying, hey, for my 4-year-old, it'd be nice to give her some Ford someday.
There you go. Yeah, Ford used to be my go-to for training people to trade options because it was so easy to chart. It was very low risk, and it gave concepts. You can build any strategy you want on Ford and do it cheap with very little risk, and you learn a lot. It doesn't have huge options moves. The premium for dollar outlay for wheel trading sucks, but boy, is it easy to trade. And you get into something like that, you can really learn a lot without having to expose yourself to blowing up an account. These little penny stocks with weekly options like this that have this kind of volume, perfect. Like I said,
for our viewers that are looking to learn, to wet their whistle, that are saying, "Man, that's a little too rich for my blood." Here you go. You don't have to buy a ton. You're looking at a $200 investment. And even if you just wanted to sell covered calls or covered puts against it, cash secured puts, you're in for $200 to start that off.
You can do it wheeling one at a time legs for $200, and double that. You can do a $400 risk and sell calls and puts at the same time. And it's a little more challenging to manage, but it more than doubles your yield because puts are always a little more expensive than calls. So your yield currently is about 12% on a weekly, which is incredible. If you're running both calls and puts, I'm just looking at the chain now. Monthly, you're looking at about 28% monthly. So I mean, if you want to do monthlies on it, you could, but your weeklies are going to really pay you better. And if you get assigned, so what? You're going to get assigned cheaper than anybody. And this thing's steady with Bitcoin. So it's like not going to, expire overnight and go gunny bags on you, very likely anyway.
No, and the good thing is that all these companies already faced their fear of bankruptcy.
Right.
In other words, it came when Bitcoin went from 70 to 16. So they've all realized that they have to hold cash. Most of the Bitcoin miners outside of Mara do not hold much Bitcoin. They pay their bills they used to only pay their bills with it. Now they pay their bills and they put money into the bank.
Nice. This company looks great because I don't see a single reverse split in this thing ever. These guys don't even have any fear. They're just good to go. I like it. Thanks for pointing me at this one. I'm gonna use this.
Absolutely.
It's gonna be a wheel trading magnet for training. Cool. I can actually make my video with it.
There you go. I love it.
Right on.
When you get that done.
Will do, man. That's going to be a concept. You guys are going to be blown away. Like I said, you can own this for free in as little as 6 weeks if you're really nimble and you trade options well, as far as the seller goes.
You just hit the title of the video.
There
you can own this for free in 6 weeks or less.
Nice. And to boot, you won't have to spam your Robinhood link. One thing I will say, though, you need to unlock Tier 3 options trading to do this. So you need to go and make some adjustments to your risk profile on your Robinhood account so that you can apply for Tier 3 options trading. And once you have that, dude, this thing is easy to own for free in 6 weeks or less. So right on.
I have all that already.
Yeah, same. I've been doing it for years.
I use it until I realized now that it wasn't really free.
Yeah. I mean, sure, they're making up.
Spreads weren't as good, on some of them. So, it matters. Like I said, I still use it. I still have. That's why I can pull it up so quickly, as I do still use it. It's an easy interface that I've used I've learned on when I first started trading. and therefore I know how to use it, so I feel comfortable. Comfort's a big part of trading.
Yes.
And that's it's a good learning thing for your viewers. Don't get pushed away from something just because people say, oh, that's where the
Yep.
beginners trade, or step up to this. I've heard it a million times.
Yeah.
And I'm like, I don't like certain interfaces. I think TOS is terrible, and
I do too.
everybody loves it except
I
for
hate
me.
it.
Oh, you do too? Hey, and there you go. That's why we get
Yeah.
along so well. But the company I used to work for, Prosper, that's all they use.
Yeah.
And it just didn't work for me. It doesn't. Again, things got to fit your eye, right? And not every platform's for everybody. And the way their option chains, come up, and what I had to click and didn't click, I didn't like it. Robinhood makes it. I'll
It's
give them
simple.
credit, Vlad.
It's
Makes
almost
it easy.
it's almost gamified. Um,
Yeah, exactly. And I never got into the Webull side because I was already on Robinhood, but same thing, and
I
I know
love
your trading mate, I feels that way, where it's a very
right.
user-friendly interface that when you ask about futures, I just started playing around a little bit on there off of your suggestion, and I love it. And again, for the same reason, it's a gamified way to do it. And that's what I am. That's what I look at.
It's playing a video game that pays you.
Yeah, well, I mean, I listen, my charts are complicated enough. I don't need to complicate actually putting a trade in.
Right.
And that's what I felt like it was with TOS, is that,
It is.
I needed to do 27 things and then double check that they all went in correctly, where I'm just bing, 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 I could get right in on Robinhood, and I was happy with it.
Well, I apply a concept to Robinhood that not many people consider. If you can't beat them, join them, and they're
Yeah,
making money on order flow. Of course, there's some slippage that they also capitalize on in ways. But if you put yourself in an option seller point of view, and it's only
yeah.
3 cents
Uh-huh.
per trade or 6 cents round trip on an option, why the hell not? Um,
Right. And
be
the
an option
bottom
seller.
line on that too is, if you're selling, you're setting the price.
Yep.
So it doesn't matter as much. The same thing. What my comment would be is, anyone using a market order on Robinhood is making a mistake.
Yep.
If
Yeah.
you're using a
Always.
limit order, then you're setting your trade, your parameters already,
Exactly.
and you're trading what's in front of you.
Yeah, right from the get go, I said it. Use Robinhood. Everybody's going to badmouth it for this reason or that reason. But if you just trade with limit orders, you don't have to give a damn what those people are saying. That was plain and simple. I said that right back in the beginning in 2018, and
You nailed it.
it's just a matter of once you understand how a broker works and you know how to utilize it. Who cares what anybody thinks about it? Just use the damn thing. It's a tool.
Yeah,
If they're going to complain about it, they're not using it right. Plain and
yeah,
simple.
absolutely.
Take advantage of it. And if you're an option seller, dude, yeah, Robinhood is a no-brainer. That's all I use to sell my options. I'll day trade options on my Webull platform. I don't have it set up with a margin account, so I can have a cash account and have it roll next day. I'm paid. I'm in the bank, ready to go with my next day trades options. So I keep it that way. But my option selling account, that's straight up my Robinhood account. I don't even trade in TOS anymore because I just use Robinhood to sell all my options and wheel on, baby. So that's where it'd be.
Yeah, and that's what I found, was I would have to go back and forth too for certain things, and I'm like, well, that makes no sense.
Yeah. Well, I mean, I can get all my chart data done on Webull. I mean, Webull has, like, for a free platform to use, and even if you don't fund an account, you still have access to their very real-time charts. Their charts are, I mean, they blow everything out of the water. TOS doesn't hold a candle to it. Yes, you get more options with being able to code things with TOS, of course. But for user friendliness, Webull is incredible for charting. I do all of my charting on Webull. And then sometimes I'll do my charting on TradingView for education as well. And sometimes I'll even do videos using TradingView to just kind of show price concepts a little bit different. I love TradingView
I'm a
too,
trading view guy.
and it's every bit as good as Webull. It's just Webull's a little easier to use, is all. So I go with easy because I'm having
Yeah,
to
absolutely.
I'm having to chart fast. I trade a 1 second chart, y'all. So I need
Yeah.
fast, and Webull is every bit of fast. So that's my go-to for fast charting. And then secondary for me is going to be TradingView for being able to have great charts with really good drawing tools and really good usability. So that's my concept on it. Anyway,
I
I
like
think
the scripts on TradingView also. I find that there's good community scripts.
Yes. One to look into if you want to be a really, really efficient scalper is the B4 script. That is a public one, and great signals on that for day trading. You'll take some time to learn how to use it, but when you do, man, it's like shooting fish in a barrel. Very easy. I love B4. Just to give a recommend out there and maybe plug it. I know we're on overtime. We're going on quite a bit beyond 12:30 here, but I appreciate your time and thank you for joining us, everybody. I think we're going to probably be out with some great setups for next week, so just stay tuned. Tuesday, Matthew and I will be out here just killing it. So in the meantime, go get yourself some lunch before the market takes it from you.
Absolutely.
Don't go using the brain without feeding it once in a while too, because it takes a lot of head work to do this day trading thing and swing trading thing to So stay fresh.
Step away. I always walk the dog about now.
There you go. Same here. I got 2 of them to walk. So
there you go.
All right then. Thanks again.